Now the buyers say, okay, I got you. You came in at this price. We came in at this price. We agreed somewhere in here. The transactions happened. You made sure you had the right amount of supply. Boom. Now let's make the transaction happen.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Trade and get paid, 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 trade and get paid.
Sam, Joe's personal assistant here. This is a continuation from part 1 of how to trade like the banks. If you haven't already, check out part 1 linked in the description below for this free exclusive TGP class to make sense. Enjoy.
You have supply. That supply needs to be dumped off. There's an agreed upon price where the demand is. Demand is down here, supply is up here, and these sellers are looking to meet these buyers. Well, the buyers say, well, here's where I'm at. The sellers say, here's where I'm at. And here is where they meet, okay? This right here is a supply dump. Here's that connecting transactions, those connecting flights I was talking about. So let's just say in the same vein of what we were talking about, GA, all right? So here's the same vein of what we're talking about. This is where the Aussie is meeting the USD and meeting the NZD and meeting the JPY and meeting the CAD and meeting the Euro. That's where all of those connecting transactions are happening so that they can accumulate enough of that supply in the right currency to make this deal happen. So what happens? They bring that supply down to the buyers and it meets demand. The demand happens and here we think that's it. The move is done right here. No. Watch this. This down here is still this happening up here. Now the buyers say, okay, I got you. You came in at this price. We came in at this price. We agreed somewhere in here. The transactions happened. You made sure you had the right amount of supply. Boom. Now let's make the transaction happen. All of this is being fulfilled right here. Okay. Now, here's the thing though. When that is being fulfilled right there, do you think that that all business stops until these orders are filled? No. While this was all going on, there was still more money being filled, more orders, more money people are spending money internationally every day, all day. So while somebody was working on this trade down here, right? While somebody was working on this trade, there were still more orders being filled, more orders taking place. So now this agreement happens right here. But in the meantime, more orders were coming in. So guess what? In those orders, some were buys and some were sells, right? Some was created demand and some created supply. Does that make sense? Sorry, went too far. Some created demand, some created supply. So as this order was filling that trade, guess what? More orders were here now. So now the demand is more. And there's more supply. So here's what we call accumulation, right? Accumulation. This is what we call deceleration. And this is what we call reaccumulation. So now at this level, these buyers are now here and these sellers are also here. And they're negotiating the additional orders that came in while they were making this transaction happen. So now the buyers say, hey guys, do you have any more of that supply? Because while we were making this deal, we have a need for 60 million more units. And the sellers say, well, we did have more come in. We can meet 30 million of those units. So more negotiation happens, probably some kind of a fake out to bring that price down where the buyers are going to make that transaction happen again. There's your fake out. Price goes back up and there's more demand than there is supply. So which way does price go? Up. When there's more demand than there is supply, price rises. So because there was more demand than there was supply, price went up. When price get up here, what are we seeing again? This more orders. But now, guess what? The orders came in and the buyers are going, wait a minute, this price is kind of high. I don't know that we're willing to do 60 million more. At this price, we'd only be willing to do 20 million. Yes, Kenny, fake outs are intentional. Absolutely. If we don't accept the fact that the markets are being manipulated, we're gonna drive ourselves crazy. The markets are being manipulated, and we are thankful for it, because when they are, we know how to trade it, which that's another class for another time. But when we know how to trade bank manipulation, it actually helps us when we see gaps and special spikes and abnormalities, because it allows us better entries for already existing trends, which I'll get into another time. But now at this higher price, the buyers say, well, I've only got about 20 million units that I'm willing to pay this much for. But the sellers go, man, price is kind of high. Instead of us dumping into this transaction anymore, we need to be looking for other higher bidders. They go, man, we got 100 million we're willing to go at this price. So guess what? There's more supply than there is demand. Price goes down. Where do you think it's going to go down to? They're going to want the buyers to honor the previous price. They're going to say, hey, you bought at this price before. I'm not coming to meet you all the way down here. You met me here before. So they do business at this level, and then price, and this is how price moves. Now, I know there's a whole lot of crazy markings all over the screen, but does that make sense to everybody? Is everybody understanding the concept of accumulation and distribution?